The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, we are having a rally in stocks. 95% of the stocks in the S&P 500 are up today. That's pretty much of a no-brainer. If you'd have thrown a dart at something, it'd be up today. So we'll see how high they go. The one thing that I feel pretty strongly about is that we did make a bottom here yesterday. That was at the 50% retracement on the Dow Jones. We were expecting a Bradley date to come in around that time. The next Bradley date doesn't occur until around November the 20th, and so we should be up for the next month without too much trouble. And since it's come out of here so strongly, it's a really indicative that it wants to go a lot higher. This is our strongest rally of the year thus far, and we've had a pretty strong year, so that's telling you something. But this was a pretty significant cycle bottom, in my opinion, and I think that we will eventually go higher into the November the 18th, 19th, 20th, around that date. We'll see if that's going to be the area where it holds. This is based on these transits that we're looking at, and also, which are included in the Bradley model. And when they work pretty good. And when they fail badly, just like everything else. So you've got to use a little common sense. If we go below the low we made at 14,700 in the Dow the other day, that would really be a negative occurrence. That would be one of those things that would cause one of those C words. So we'll have to just see what happens on the next run here into October until November the 18th. We will see, what occurs, at that point. That's the real interesting thing that we want to be watching. Now, the next market that I wanted to cover was the bond market, because we talked about it yesterday, about that incredible support that was there, and we have broken down to the downside. It was due to go either way. There's no question about that. But now what we're doing is we're coming down, and we're going to be testing a 382 retracement. In all the years that I've looked at bonds, going back to 1976, folks, I've never seen a pattern where you've had 11 days in a row at the 786 number or 618 or any other number where it just stays there, and now we've come out to the downside. Usually in technical analysis, when something like that happens, there'll be one more try to go back into that area, so we'll have to wait and see if this is going to be that type of a case. But around the 132 level, where we're trading around 132.02 now, we should come into a little bit of support, because that's the 382 retracement of the whole move that we made from way back in September. The 382 comes in at 132.25, so we're very, very close to that level right now. We're not very far away. So that's what we're watching in the bond market. We'll have a pretty good idea, the next few days of what's going to happen with it. But to see 11 days there like that is just it's just highly unusual to see something like that. Now, this is the Commodity Show, so if you have any questions, it's 877-927-6648, and we will be happy to answer any questions that we can for you. I wanted to switch gears just a little bit here and come over and talk about the gold market a little bit. And I want to bring in the XAU, the gold and silver index chart, because we've been breaking down below the 50%, below the 61%, below the 786%, and now we're retesting the bottom that we made way back in July on this weekly chart. So we're at the moment of truth now. We must hold here if this is going to be good. Now remember, the rest of the market has a bullish bias as we see it because of the strength that we're having today. That gives us a very strong indication that that cycle low is important because we exploded out of there so quickly. The question is, why haven't these gold mining stocks kept up with the rest of the pack? I don't know the fundamentals behind it. All I know is the prices are going down, so you have to respect it. So these are the things that when you're watching these things, you've got to ask yourself, if the rest of the stocks are going up, why aren't the gold mining stocks going higher? And that's a pretty tough thing to think about if you're long these things, because what it does, it tells you that if you have something that's really bullish and it doesn't want to go up, there's only one other way it can go, and that's down. So just keep in mind that these things can certainly move the other way when time starts, and that's what we're having now in stocks. We had all that oversold action coming down from the September 19th full moon when we had the Fed and the FOMC. And now it looks like there might be some hope in Washington, and so they're, running the stocks up. But I think it's based on the cycle that we've been looking at, and that's primarily, what we're watching. Now, I want to talk about one of these indices that we follow that Basil Chapman does such a fabulous job on, and that is the VIX index, because it gets a lot of bad press when the markets are down. It gets a lot of bad press when markets are up. But on the bottom line, this is a very good indicator of fear and greed. And as you know, yesterday we had a tremendous amount of fear and greed come in. We had the big ABCD complete right up around that. We figured it would go up into the 20 area, and it got to 21, 22, and then it gapped down today to 1665. And that tells us that we're most probably coming down into this November 18th low, which we'll be expecting a high in the stock market. Folks, when you have a big volume day and 95% of the stocks are up, that takes a lot of buying. That does not happen very often. That's an outlier event. So this is a major bottom that is formed here. 1 second, please. So just keep in mind that if we go below the low we made 14,700 in the Dow, that would be a very negative occurrence, and I would assume the market would go a lot lower after that. But if it's set up like this, this is going to set up a tremendous trading opportunity from now until November the 18th, and then after the 18th, it's going to set up another great trading opportunity that will take us down into the end of February in 2014, because that's the place where we have the next low that is coming together, with the Bradley model. And since it's working relatively well from this level, we have to assume that that's what's going to happen, on a longer term basis. Now, the price of gold. We need to switch over to the price of gold because we looked at the gold silver index, and the price of gold has been acting much better than the gold stocks by a long shot, because we did hit the 61% retracement, and we're very, very close. In fact, we hit the exact 61% retracement 2 days ago in the gold at the 1276 level, and that is usually is a very good buying opportunity in gold. The market, after it made its high up there at that 1445 level, has now come down to the 61% retracement. It's done it very orderly over the past, 6 weeks. And we made the low last week, so we're retesting it right now. But should we go below the 1276 level, I assume we're going to come down and probably test the $1,000 per ounce level in gold if it fails below that 1250 level. That's what I'm looking at as far as a potential in the gold market. Silver has been acting a little bit better than gold, but not that much better. I wanted to put this up and let you folks see it because it has a very good correlation with gold. It's called the poor man's gold, as we all know. And I wanted to show you the fact that there's going to be two things on here that are relatively important, and that is the price of silver today was acting much better than the price of gold. That was very unusual. I mean, it's held up far better than the gold market for the first time in quite a while. The gold market took out the lows of the last few days, whereas silver was able to hold that level. So right now, gold is in this trading range, and I think that if it breaks out above the 1330 level, then we've got a chance, to head up into the 1600s in the gold market. But the jury is still out. It still hasn't proved that it's bullish. We've been down 6 weeks since our high at 1445 in the gold market, so we have to pay attention to what's really happening and whether we can get above the 1330 level one more time. We've tested it a few times, but we've never been able, to break through it, on the long time frame. Now, I wanted to switch gears here for just a minute because we always follow the currencies, because many of them are, following with the rest of the world as far as, how the stock markets move. And we talked about this bullish Gartley pattern that we had in the Japanese yen 4 days ago. It was on Monday's show down at the 97 area. We got as low as 96.60, and we've now gone about $1,500 higher, and with another strong bias to the upside. This was another way of playing the long side of stocks, because the correlation between the Japanese yen and the U.S. dollar versus the Nikkei Dow is better than 90%. So if this says it's getting ready to bottom, then the Nikkei should be getting ready to move, and that's what's happened so far. But it's still, relatively early in the game to see if that is going to continue or not. The euro and the pound are also rallying a little bit today, not much, but they are doing a little bit of rallying. And so we'd be looking in the British pound. I'm going to put up a 60-minute chart in the British pound to show you how weak the market has been. And if we get a rally up into the 160.40 level, which is 40 pips away, that would be a really good place to potentially put on a short, because that would be equivalent to the last rally that we had up around 61.25. And it would also be a place where your risk would be very small, because you'd be right at the 61% retracement. It would give you a very good chance, to look at that. After the break here, I'm going to be focusing on the grain markets. So if you have any questions, it's 877-927-6648. I want to mention that we're getting very close to that price objective that Mr. Z and the Den talked about 5 months ago. That's 425 in spot corn. That's December corn. So we're at 437 and change now. So we're less than $600 away from that long-term target, on the corn market. So the grain markets have had a little bit of a rally, at least in corn. At least in wheat and beans. But we've got to take a little break here, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV the daily chart of December corn, and as you can see, we're trading at around the 438 level. And there doesn't seem to be any buying in any. There's not a buy pattern even in sight in this thing, so you can't really touch it from the long side from my point of view. So I just wanted to say that it seems to go lower once it breaks these, important support points like we did at 455 in the December corn. It tells you that the market does want to go lower. I want to take a moment now to talk to you about trader fatigue. And I can tell you from firsthand experience today, and this is why I'm bringing this subject up. Personally, when I'm trading, and I watch the markets quite a bit, as you all know, but when I make an error, I'm very alert to, that something's wrong, either buy, sell error, or put the wrong price in, or something like that. Well, the markets have been incredibly active for us these last 3 days, and including today. And we've done very well because, we were short the euro and short the pound and short gold. And, we had some things working, stock indices. We were short those. And so we were really doing, really well. But then today I made 2 errors early in the morning. One was pre-market and then one was right after the market. And once that happens, I go into shutdown mode. I will not trade anymore the rest of the day. And I will watch the markets, maybe not, I don't know, but I'm aware of when I have this. And if you're a trader that trades by yourself You have to know when things like this happen, for in you psychologically, because this is really a strong effect. Many people will try to trade through traders' fatigue, and that's certainly the wrong thing to do. When I'm finished with the show today, this is the end of the day for me. I'll be coming back strong tomorrow, but that will be the end of my trading for Thursday. In fact, I won't even watch the markets the rest of the day. We've been looking at the buy and the S&P futures yesterday somewhere around that 1640 level, and they did hold that level and have started to rally up a little bit. And we think they're going to go a great deal higher before it's all over. But we do know that if we go below the low we made yesterday in these markets, that is incredibly bearish. I mean, it would be so bearish that you just you couldn't even put a number on it. But I don't think that's going to happen. That's a really big outlier event. So just keep in mind that I think we're going to be going higher into November 18th, based on these cycles that we're looking at. And by the time we get to the 18th, we could be at new high ground. We could be at a 61% retracement. We don't know where we're going to be on November 18th, but nobody else does either. So if you're ready to plan something, your next big planning date is right before Thanksgiving, and that is on November the 18th. So we have to, keep that in the back of our mind that that's going to be something that is going to be important for us to look at, and we will keep it up to date as we get to that spot. I made a note that when we get to that point, we want to re-examine where we are with the ratios and the patterns and the Bradley model to see if we can get closer to finding a really nice place to get short the market for the move we see happening between the end of November into 2014, which would be February. So that's the main thing we want to do. Now, I wanted to switch over to go to the next grain, and we were going to talk about wheat, because wheat has been far more bullish than the corn market. We've rallied from the 625 level up to the 690 level, which is a 61% retracement from the May highs, and it's a 38% retracement from the January yearly high. So there should be some resistance around the $7 per bushel level in the March corn, and that's what we're watching. Excuse me, December corn. And that's what we're looking at, is around the $7 level. So far, we've been to $6.99 a bushel, which is pretty close to $7. So it might have already made that objective, but we don't know yet. So wheat still looks like it is making some type of a top in here, because we've been up for 2 months, and we were only able to rally 25 cents, which is a very meager rally in the wheat market. The last time we had one of those was in January. The market rallied 40 cents and then broke another $1 a bushel, and that's a lot of money. $1 a bushel is $5,000, and 40 cents is $2,000. So those markets move around a lot. They're easier to trade than some of the things that you might think, like crude oil and gold, because the value of the contract is less, so your volatility is less in the wheat and the corn, and the volatility is less in wheat. Okay, we're going to take a little break here, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we have one of our favorite people on the line, John from Philadelphia. Are you there, John?
Hey, Larry. Good day to you, sir.
How are you, my friend?
Very well, thanks.
I hear
Larry,
I hear it's rainy and windy there today.
We have the remnants of former Tropical Storm Karen that made its way up the coast. You might recall a year ago there was something called Hurricane Sandy. It was October. It's October now. You just can't help but think something's going on.
Well, that's for sure. What can I do for you, my friend?
Larry, I appreciate you sharing that daily bond chart today and yesterday and observing how unusual it was that the bond futures contract had gone virtually sideways for 10, 11 straight trading days. I wanted to ask, I listened to your commentary, and, of course, bonds have sold off, and I think I heard you mention a comment that a bounce in bonds back towards that range was likely. I wanted to ask or just put forth the possibility that, in fact, that period of 10 days of multiple highs right there in that 133.5, 134 level, failing to get through, is that not possibly just indicative of what we frankly should not rule out or even expect when the long-term trend in bonds has turned down. Yeah. Is that not a scenario we should consider strongly?
You're absolutely correct, John. I was looking for a minimum 382 retracement, which would have taken us up to the 137, 138 level, and we only got to 134. And that tells me that the market is incredibly weak. If this is a major high here in bonds, and when you look at all that distribution, you know, it really makes you think that that's really what it is. You're looking at interest rates that are going to go very high very, very quickly. I mean, they've already had a big run and, you know, came back a little bit, but this next leg could really be, you know, quite disastrous, especially if we happen to take out the 128 level. But the jury's still out. I think that if we can hold the 131.5, which is the, 382 retracement of the low from September, then we still have a chance for a move to the upside, you know, in bonds for another month or so, which is what we're assuming will happen into November, and then it start down with stocks around the same time, the third week in November.
Right, very good. I was just observing the way bonds had acted since that July 2012 peak. Well, we peaked, and then, you know, from, July, August 2012 in through February, March, April of this year, you know, a good number of months, chopping around right near the highs, leading those who were bullish to continue to think, you know, the market's only pulled back a touch. I am still bullish. And then breaking hard the way it did in May and June, I just can't help but think that, yes, we made lows the 1st of September, and then bounced, of course. But if you look at that price chart, that daily chart, it looks, basically the month of August and into September, you know, 60 calendar days has been a kind of a congestion period, leaving open the possibility that that is just a sideways move, if you will, and that the market is now poised for, you know, another leg down, possibly as dynamic as what we saw in May and June. So, I don't know, just something that's running through my head.
I think the key will be, John, is if we accelerate several days in a row in the bonds. You know, this first day is just taking out all the stops from the last 11 days.
Yeah.
And if we go below the 131 level, that would be the first indication that, yep, this is it. And we could start to accelerate, you know, rapidly. And like you mentioned, that if that is the top after those 11 days of consolidation and the market starts to accelerate, you're going to be looking at a real spike in interest rates that the Fed won't be able to do anything about it, because that market will have a mind of its own, and it will, push it into that direction. So that's what we're waiting to see what happens. The key level for me is the 131 level, because, you know, we had a high right at near 133.30. We just missed 134, and then we stayed between 132 and 134 for a long time, and now we're breaking some of those lows out by just a little bit. But if it doesn't follow through, that's going to be a big indicator that, yeah, this thing could still see some more to the upside. So the action that we see on Friday and the action that we see on Monday will determine it for me, because if we have weakness in bonds on both of those days, then you're looking at something very, very sinister to the downside and interest rates going higher.
Very good. Larry, I will just lastly just share with you, I'm currently looking at the 10-year yield, the actual interest rate on that 10-year note. It's currently 272, and that high in September was 298, you know, basically 3.0%. I'm looking at that and saying, gosh, if we get through that, that will be the spot where it could really run to the downside bond-wise, and, you know, yields run higher. So, but listen, thanks so much for your thoughts, and I appreciate you sharing that chart formation yesterday. That was very helpful to see.
Well, thank you very much, John, and you have a wonderful day.
Thanks, Larry.
Okay, folks, the next one we're going to look at is we're going to take a look at the sugar, because, we were looking at a bottom in sugar back in August when we had the head and shoulders bottom down there and the 786 retracement on the right shoulder, and now we've extended a little bit past the 786 level that came in at 18.44 bushel per pound. I'm thinking in terms of corn and soybeans still. But sugar is traded in pounds, and it trades at $11.20 per point, so it's 11,000 pound contract in sugar, world sugar. But we are up near that 786 retracement. We've been there for 5 days and really have gone nowhere in sugar. So we should be ready to see a pullback in sugar somewhere around the 17 level. That's what I would think would happen, because if it hits the 786 and starts to back off, the last move that we had on the correction went exactly 1 cent in sugar, $1,000 from 1860 down to 1760, and that would be a place where the market would be making a 50% retracement of the last low, and that would be a good place to go long in sugar, folks. It'll put you to sleep. I mean, you don't have to worry about it. You can't trade it intraday, but on a daily chart, you can buy sugar, put a stop in, and not worry about it, because it trades very slowly without much things going wrong with it and stuff. So it makes it real interesting to see that you have to stay with it for days and days at a time to make any money, but it doesn't hurt you either. Well, it can when they're in a weather market, but that's not what's happening right now in sugar. So we'll just have to see what occurs here in the next few weeks. Most of the sugar, of course, is in the southern hemisphere. A lot of it coming out of Cuba, and then also out of India, and where's the other place? Puerto Rico has some too. So, but it's a world traded commodity, and it's not traded as active as corn, wheat, or beans and stuff. But it's still right in the ballpark of those things that we're looking at. Since we're talking about beans, I want to switch over to the soybean contract, and we're still watching the November contract. It's getting ready to switch over to the January or March, and I switched to the March because that's one of my favorites. I've had a lot of success with the March contract through the years. And if you'll give me a second here, I want to update my chart here, because we had a data fallout again, and I had to refresh the data again. So if you give me 1 second, I'll be able to pull it up here. There we go. We should be okay now. But we just made a 61% retracement in the soybeans. It stopped right on the money, and it's looking like, as a matter of fact, we should switch. Let's just do that right now. Let's switch to March beans right now, because they have just made the retracement on the 61% retracement just a few days ago. It was spot on to the exact penny, and we're looking for the market now. It's backed off just a few days. It's in a buy mode now, that you could buy March soybeans and not risk very much at all. So that's the situation that we're seeing in soybeans right now. We had a 5-day rally after our low in late September, and now we're making a 61% pullback on that right now as we speak. As a matter of fact, let's just go look at it on an hourly basis. And we've not quite made it, but we're very, very close. We would have a Gartley pattern forming here if we can get the soybeans to come down to about 12.62, about 10 cents from where they are right now, would form a really nice buy pattern in the March soybeans. So we'll keep that in mind and watch it next week when we come up. Someone mentioned copper this morning on the in the TFNN Tiger's Den, and I wanted to bring it up and show you the fact that we've had a tremendous down move in copper, and now we've stopped just above the 786 level. Which should give it some support, and we've already rallied 3 cents off the bottom today. But that's a function of the stock market going bonkers, because you've got the S&P up almost 30 points, the Dow up almost 250. 95% of the stocks in the S&P 500 are up, and that's an outlier event in itself. So there's going to be very little selling, coming into that at that time frame at all. So that's probably some type of a sympathetic move is happening, in copper also, but we will wait and determine what happens to this over the next few days. I don't see anything to do in copper at this point. We did hit some strong support down there at $3.25 a bushel, $3.25 a pound, and we will. There's another example of trading air when you start measuring copper in bushels. That's another bad sign. So we'll keep that in the back of our mind, looking at this. Okay, we've looked at the corn and we've looked at the copper. I wanted to switch over to the gasoline futures because we talked about this the other day. Wow, this thing is really going nuts. It's we had a 3 drive to a bottom pattern forming in gasoline futures just on Monday. We made a 61% pullback yesterday to the exact penny, and now gasoline futures have jumped 10 cents a gallon in just a matter of 2 days, and they're more than 15 cents a gallon off of the bottom that we made on October the 3rd last week. So that was a 3 drive to a bottom pattern that was just picture perfect. It had the AB equals CD leg perfect. The time between AB and the time between CD was equal. The ratios were 1.27 and 1.618, and that's what we look for. It doesn't get any better than that. So we'll see how the rest of it, lines up over the next few weeks and see what happens. It'll probably give you another chance to buy gasoline futures, down the road. Now, there's a big difference going on between what's happening in gasoline futures and what's happening with the crude oil, because crude oil has not had the same type of action that we've had in the in the gasoline futures. And so we'll take a look at crude oil here, and I'll just give me a second to pull it up, and you'll see that it's been lagging badly. And let me just put this in. I think it follows gold more than it does anything else these days. I'll do a daily chart on this because you'll see that we've had a little bit of a rally today, but you'll see the difference between the crude oil and the gasoline futures. Gasoline futures have been just totally decimated. They've gone from $3.50 a gallon down to $2.55 a gallon. That's a move of $40,000 in gasoline, and crude oil has actually stayed up at a high level. It's made a double bottom from where we were last week, which is a positive sign. And all it needs to do is to get above that 104.50 level, and it'll have a pretty good chance to assault the 108, 109 level in the crude oil. So that's the story that I'm looking at in the crude oil complex. As long as we can stay above, $101 a barrel, which we've done, that's a very strong 50% retracement on these moves, and so you have to give that a great deal of respect when you're watching these. Now I'm going to switch over to. Give me 1 second here. I wanted to take a few seconds and talk about the rough rice contract, and that is the biggest staple in the world of food. And I wanted to show you the long trading range that we've. Oh, we got to take a little break here. When we get back, we'll cover some rice.
TFNN has just announced a special sale for 2 weeks only for the Gold Report to celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd. TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're going to wind up the show by looking at 2 things. First, I wanted you to take a look at the contract for rough rice. This is the rice contract at the CME, and as you can see, it's been in a very strong uptrend for well over a year and a half. And, the patterns are there. If you like trading patterns, rice trades very, very beautifully on the patterns. It's for daily trading. It's very difficult to trade intraday, in my opinion, because it's a lot thinner than in the other markets. But for daily trading, it certainly holds up very, very nicely with the ratios and patterns of the Fibonacci summation sequence. Our final caller of the day had a question about the price of Apple. And so I put the price of Apple into the Tiger Den to let you take a look at it because it's it's really interesting. We had the Gartley pattern form, back at 385 in the end of June, and then on this pullback that we just had into the full moon of September the 16th, that was a 50% retracement. But the interesting part of Apple is what's happened since then. We had a strong rally from from September 19th, right at the FOMC. For one solid week, we rallied up to the 786 retracement, and then we came down. And during the time the market was getting hammered this week, the price of Apple was making higher bottoms. That is incredibly bullish, folks. That gives price objectives of this ABCD move in Apple all the way to the $560 per share level. That's only $70 away. And, of course, Apple can move quite a bit. But it follows the numbers of the Fibonacci sequence very well, and it certainly follows the patterns. And we're looking at a price objective of at least $560 something. In Apple, it's a stronger than market stock, and that's, when the market's going down like it has been for the last 7 or 8 days and your stock doesn't break, you got a problem because, things that don't go down on bad news, they go up on helium. So you don't want to be short Apple. And, of course, it might drop $70 tomorrow, but the chart's telling me that you don't want to be short this stock, at least not until it gets to, the 560, 570 level in Apple. It's got a very clear pattern at that spot, and it trades very nicely off the patterns. If you remember from the weekly chart that we did on Apple, many weeks ago when it was up around 700 a share, we had a situation where the market, broke it broke in half in Apple and stopped, right at the 50% retracement, and now we've rallied up to a 50% retracement. But if we bust through this, that'll take us to the 61% retracement, which will be, you'll never guess, 567. So that's where I think Apple is going, to the 61% retracement of the move down from September of 2012 into where we were into June of 2013. We're in the midst of this move now, and that should take us up to the 567 level. As I mentioned, is the 61% retracement of that move. And if it's timed right, it might be doing what the market is doing with the Bradley model. It would be the third week in November that we would be watching this phenomenon occurring with Apple. So you can't be short Apple here, because if the market doesn't go down like the rest of the market did, it certainly tells you that it wants to go higher. That's the bottom line. Because if bad news does not push a market down, it's going to rise of its own weight. That's just an old market adage that Jesse Livermore used to talk about in his book Reminiscences of a Stock Operator, because it's very, very important. Just the opposite of that, if you have really good news and the market won't go up, then the market will come down. And that was indicative of what happened at Apple at 700. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.